you guys feel like celebrities when we play that? Fran Celebrities. I guess the awkward laugh is enough for us to kick. Of course, you were going to say something right when I pushed it.
I was just going to say, you usually have such a strong opening quip, but not that time. That was probably your weakest one.
Charles threw me off because Grandpa Charles couldn't figure out technology today. I'm already off.
No, I'm not going to comment. I'm going to make this super productive.
I don't like when you don't comment because I've created the new icon for franchise fighting.
Oh, you do? You have the Fran fight one?
Okay. Is there any Fran fight you want to kick it off with, Charles?
No, not right now, Nick. Not right now.
All right, so we're doing Ask Us Anything, and look, we got some new visitors saying hello. Dawn lies, but we're not celebrities. The audience is getting better. So we're doing Ask Us Anything. So to our audience, that means you can ask us anything. If you want to know what Brent's favorite color is, or if Charles wears boxers or briefs, that's how this works. Like, you can ask any question that you want. But I'll kick one off because I was thinking about one today. And I'm particularly interested in Brent's feedback. Charles isn't as smart on this. Oh, look at that. Scott Oak said, "I'm fanning out." See? It's kind of cool. So we have a client, and I'm gonna leave names off, but I'm curious, specifically Brent, and then Charles will give some ideas. It's a good business, but it's a full service restaurant. Requires a lot of capital to get involved with it. And so we've done a good job of building up momentum for the business on the franchise side. Like, they go from not selling a franchise, say, over the last 5 years. So they got one deal done last year. They already got a deal done this year. New blood is starting to come in. And they're tasting what success is. But at the end of the day, I mean, our development budget, we're spending like $7,000 a month. It's not overly aggressive. And there's a children's education franchise that our budget is like $30,000 a month. And so it's interesting because the full service restaurant brand wants lead generation very similar to another brand. And so I'm running into this like capital issue, but I'm also like, if I want to get you leads, like really good leads, then I'm running out of ideas on where to spend, because I think it's got to get in front of the customers that are going to have the right financial bandwidth to want to be a fan of the brand and buy into it. So because you've been through this, Brent, with restaurant brands, is there any other magic other than PR, content from foundation standpoint, Facebook advertising, as tight as you can make it with the restrictions that it has, LinkedIn, and then Google competitor terms and just generalistic terms? We do buy biz, buy, sell, because I like getting in front of people that are looking at buying a existing restaurant. Is there any other magic to this? And does it come down to, I mean, last statement, I know it's long-winded, but does it come down to access to the customers and then increasing spend?
Yeah, I mean, so you've been doing this longer than me, and you know that the first thing is ensuring that the model's viable, right? Have they really done everything they can to optimize the economics? Because you can have the slickest marketing and best lead generation channels out there, but if the offering isn't strong, you're always really going to struggle. And so, of course, I know you've already done that. We always do that. We work through and coach the brands there. From there, it's okay. So the economics are as good as they can be. We have franchise owners that are validating and happy. How do we get going? And that is such a challenge, right? At $7,000 a month, that's a real risk, right? You know yourself, you're running about $25,000 per deal right now if things are going well, and so that's at least a few months, even if they're performing. So any way to squeeze that budget or reinvest into it would be the first thing, right? We'd really like to see those brands up above $10,000 a month. We always work back from the economics of what's the ROI on that investment? When you get one deal, it's not just a $50,000 franchise fee, it's 10 years of royalty. And so you have to build the ROI on that total equation. So yeah, I mean, they're the basics, right? Spend what you can, make sure that the model that you're offering is as strong as you can. And then from there, that's when you can start to pull some levers to see if you can make any forward movement. You know, what we're really seeing right now is, I like that you mentioned Biz by Sale. There's a lot of activity on that one portal right now. A lot of units getting moved in franchising on Biz by Sale, probably 5 or 6x over any other portal that we use, which is really good. So if you've got a limited budget and you want to try a little bit of portal activity out, that's a good one to be on. And then from there, you know, what we'd like to see is, if you really are short on that budget, having a channel where what we call hunt mode candidates, right? People that are actively going to Google and searching, I want to buy a restaurant franchise, and they're seeing that listing on Biz by Sale. They're people that we know have an active interest in it, and so it's a good lead. What we do from there is really build a funnel that takes weeks, months, and even years to market to those folks, right? And what that means is retargeting them, popping them into a database that they get ads on Facebook or on Google. And we really consistently retarget. YouTube is a big one for us right now too. So over a period of weeks and months, you can start to use that smaller budget, if you've got a long-term mind frame about it, to then invest in a little bit of Google, a little bit of Facebook, heavily retarget. And we see a good amount of deals popping out that way. So I guess the point is, if you've got that shorter budget, good hunt mode channels like Biz by Sale are smart. If you've got a long-term mentality to it, you can go heavily in retargeting, and that should get you a few deals along the way. It's not going to get you your 20 or 30 a year, like the learning school, but it's a good bet.
I mean, I've been cautious with my advice, because I said we need to get indicators that something is working. And so I'll share this data with you guys for what it's worth. I look backwards at their leads because I wanted to give them something beyond, like, where's the movement? Like, obviously we've gotten 2 deals done in the last 12 months for a $3 million investment at a limited budget. So it's starting to progress. But in Q1 of this year, 85 leads came in, 15 were responsive. So our contact rate was 17%, 7 applications out of those 15 for 8%, versus Q1 of 2023, we had 127 leads. It was more portal activity. 22 contacted with 11% contact rate. Because I'm trying to see, like, I hate the top line number. I want to see what is the activity, and 2 applications. So I'm like, you have an 8x on the applications. What's stalling them out between application and buying? So I think you've answered it well, well enough where it's like, there's no magic in this. You just gotta figure out, like, how do I get more customers who want to buy my business? How do I manage those leads when they come in? And then how do I increase my budget to spend at a $3 million investment? For first year royalty could be 150 plus a $50,000 franchise fee. We're at 200,000. Maybe we should be spending $75,000 per deal, knowing that we're going to get a return, you know?
Yeah, absolutely. And you're right. There's no secret formula to this. Every brand is a little bit different. Luckily, not a lot of brands out there are a $3 million investment. So right. When you can figure those bigger ones out, it's downhill from there.
Charles, any comments on that?
Yeah, I mean, not from the tactical, from the operational. It seems like there's like 2 different mindsets for this client, right? One is franchise sales, and then one is operations. And so to me, how do you get the alignment to say, we believe in what we're doing, we believe in the process, we believe in our mission, and so we have the confidence to spend more money on marketing and lead gen? So to me, I would take a step back and move this conversation into the boardroom and say, hey, there's a lack of alignment throughout the organization as to our mission, our value, what we're offering. And if we do believe this, then how is this translating in conversion process and marketing spend?
Great point. All right, so our questions are filling up. And part of the point of today is to give you guys access to 3 different opinions. Not one of it is right. Where maybe if you go to a convention, franchise convention, you might not have the ability to ask these questions because you watch a PowerPoint presentation for 2 hours and then they give you 3 questions at the end of it. So we're giving more accessibility. Ding! You see, that was a franchise fight. You saw that? All right. So here we go from Brush Masters. What do you think the best channel is for marketing a new franchise?
The actual business itself, your internal customer list is always the best place to start. And from there, friends and family. I think people think that you got to run in and spend 10, 20 a month to get those first deals done. You don't want to grow at that rate. Usually in the first year, you want to have a handful. For some people, that means 1 or 2. Otherwise, it means 5 or 10 really well-selected franchises that know your business and are fans of it and get the culture. Yeah. So I always recommend starting with your internal network and the internal operation of the business too.
Charles?
Yeah, I mean, Brent's answer is the exact one. And what I would add to it, I refer to it as organic leads, right? People that know you, your brand, customers, social media. And then I'll add to that, because I see with so many emerging brands, you need to have your media right out of the gate. One of the things we're going to be talking about is the biggest mistake I see, and you want to have a Fran fight, there's some people out there that they don't help brands really understand their opportunity profile and what they're offering franchisees. So if you take Brent's advice, which is the accurate advice, but you're not clear about what you offer and who your perfect franchisee is, and economically what your franchise can do for them, then you're going to think Brent's advice doesn't work, but it's just that you're not ready.
My first statement is, if the three of us were to walk into every brand possible and say we've walked into their 4 walls. Now, walking into their 4 walls, let me be clear, for a mobile business, that's your van or your truck or whatever, that's your billboard. For a brick and mortar business, it's what is the 4-wall story telling your customer about what your opportunity is. A majority of brands use the word franchise. I keep on asking people, go back to the day before you were in franchise and did you understand what it is? And everybody has the same answer. It's like, absolutely not. Like, they're so overwhelmed by how much knowledge base they've built. And so we're expecting the customer, the non-franchisee, to understand what franchising is. And so if you look at IFA's studies of perception on what franchising is, people think like, this guy makes millions of dollars. They don't understand how it works. If you said item 19, that means nothing to them. And so if you're taking the advice that Brent and Charles gave, you also have to evaluate what is the story that you're telling. So behind me, I have this wall of McDonald's stuff. I think part of the magic of McDonald's was they celebrated the owner operator. You knew that this was Brent's McDonald's when Brent lived in that town. In today's world, the owner operator is a little bit more hidden, and they use the word franchise. And so we have to go back to the basics of how we're educating our customer base. So I agree, like the best form of marketing is the free type of customers that are already fanatical about your brand that drove you to even make the decision to franchise your business. But then beyond that, it's how do I create more exposure to that audience, which then you could use Facebook and LinkedIn to have other marketing tools. And obviously what your website says, which the last statement is, if all of us go to our franchise websites right now, the first message that we say is buy my franchise. Very rarely do we educate what franchising is or what to expect of becoming a franchisee. I think that's the most critical piece of content to build. Charles, why don't you go first on this one so you can say the good answer before anybody else. At what point of net profit can I think of possibly franchising? We're a newer industry of selling and installing golf simulators and want to grow across the nation.
So this really, this gets into opportunity profile also, right? So I'm assuming here it's golf simulators, so it's a retail business or there's a retail location, right? I'm assuming that's correct, as opposed to, say, is it home installation of simulators? So it's going to depend, right? Am I starting a brick and mortar location? Or if this is just installation and sales of golf simulators, well, then does that mean I'm a home-based business? Or do I have a retail location where people could see and experience them and I sell? And so why is that important? Because I think the analysis when you're franchising your business gets to how much is a new franchisee going to invest? How long will it take them to recoup their investment, right? And what effort does it involve by that franchisee owner? Are they working in the business full time? Is this replacing their income? So I would say right out of the gate, If it's a retail business, at a minimum, you want to focus on income replacement. Can a franchisee that invests in this franchise replace income? And at a baseline level, if they replicate your success, they're buying the simulators through your network at whatever prices, and they're paying you a royalty, do you believe they'll earn, say, $125,000 a year? I mean, that's where I would start as a baseline. There's so much there, but that would be the baseline.
I'll give mine then, you, Brent. I would take quick links. I would take whatever you expect the build out of your franchise to cost. Let's just use $500,000. No, we're going to use $600,000. Say it's $600,000. Then in my opinion, your net profitability has to be at least 200 so that you can pay, if you put every dollar back into the business over 3 years, you can pay back the investment. Now there's many that are much more stronger than that, but I think that's a good sign. And then back of the napkin, if you're thinking about franchising your business, in some scenarios, you could invest $30,000. In some scenarios, you can invest $100,000 in franchising your business. So for you, that's the cost to franchise your business. And then per what we just talked about, in my opinion, you should then have another double that on the side to now invest in the foundational elements of growing your franchise. So if we're talking about net profitability there, you're going to need somewhere between 30 and 100 to franchise your business. You need another 200 on the sidelines to get this thing going, whether you finance that or not. That's a good back of the napkin number. Brent?
Yeah, I mean, quick links. I love that you started with that question. I mean, I've seen franchise brands ask that and bring P&Ls to a conversation that showed like a $50,000 net on a $500,000 investment, to Nick's point before. And so they're just getting an understanding of what's an actual viable ROI for the average franchise buyer is always such a great place to start. And I can't improve upon what you and Charles said. I would just say there's a couple clues that you're on the right path with some of the other considerations, right? You sort of said you're a newer industry, and that's important. You have to understand, is there demand for this more than just in your town, right? Is it saturated, or can I truly scale this? And will it work across the country? Because you said in your question, you do want to grow across the country. So I'm assuming you've tackled that. And then of course, the third part that you have to consider is the scalability of it. Just because there's a business model that has a wonderful net profit doesn't mean it's suited for franchising. It could be highly complex with very specific skills that doesn't translate well into franchising. So understanding the systems and processes that are driving that net profit, and if you really think that you could roll that out to folks that are new to your business relatively easily, is a consideration you have to really think through before you pull the trigger on that.
Okay. I'll go first on this next one. Budget is important, and a good question would be for a franchisor just starting. It has between $1,000 and $5,000 to get going per month. What would you tell them? I'm going to give my honest opinion. If they have $5,000 a month, so that's a $60,000 development budget, I would say that's the minimum to get to. So if you're below that, I would say you're not ready to franchise your business. Because you're going to be playing too much of a crapshoot. Now, the way that shifts is if you're in a category that is exploding, so naturally the category is going to drive interest in your business, or you've really engineered strong profitability in your business, and it is a really strong business model. Like those are the two like swings that could change that. But if you don't have $5,000 a month, if you can't put 60 aside, then you're just not ready for this, and you're going to waste your money. Because if I say, go try an expo, total crapshoot. If I say try Facebook ads, total crapshoot. So let's just say you have the $1,000. You've already spent the money to franchise your business. So you got $12,000 to spend. I would 100% spend every single penny of that on creating exposure back to your customers, because that's your cheapest and most cost-effective candidate. Brent?
Oh, $1,000 a month. I'd say call Charles and ask for a loan of some of that Bitcoin. No, you said it perfectly. Nothing more to add.
Charles?
So I think your phrase is focusing on exposure back to your customers, right? So if you have $1 million a month, you may be wasting it, or 9 out of 10 new franchisors are going to be wasting it because they haven't set the right foundation. Now let's backcasting a little, you said you'd focus your economic energy, your dollars on exposure to your existing base. To Brent's point, your organic contacts, people know your brand. Well, what are you communicating to them? That, hey, I started a new franchise and you get to pay 6% royalty, or I'm going to give you marketing support, or is there, media and story that's genuine, that's talking about transformation and how this business could be a good fit, right? So my advice would be this: make sure you have the right media, make sure you understand what you're offering and who you're offering it to. And then I would strategically be calling someone like Nick and saying, hey, how could I develop this story arc? And if I only have X dollars a month, I understand that it may not get me a deal, but 12 months from now, I'm going to be a much better franchise opportunity than the same static vessel that exists today.
Yeah, I'll add.
Charles, go ahead, Brent.
Oh, sorry, man. Yeah, I think that it's such a good point. You both make a good point that if you've got that type of a budget, investing in the core collateral to start would be really smart. Like a really solid website, a list of really strong videos. And we're starting to see, like, if you've done that, if you've done the foundation properly, you don't necessarily need to pay to advertise that. You can do it organically with just rolling up the sleeves and brute sweat, right? So we're seeing, here's a brand that I've seen do this really well. Just invested in a really solid website. The founder went heavy on Twitter, really started to post every day, really told the story, shared all the victories, the lows. The brand's called Made This. Check it out. Great cleaning franchise. But with a $0 investment outside of what they invested in their collateral, their brochure, their presentation, a little PR, they were able to really drive a lot of growth before they got to FSO level discussion. And they did that with no money down, just hitting Twitter really, really hard and creating the story. So that option is out there if you're willing to do that work. And to Charles's point, have the right foundation collateral in place.
I mean, I take the mindset. Let's say I have 12 grand in my bank account. Can I buy a Lamborghini? And the answer, or should I buy a Lamborghini? They might sell it to you and then steal everything else. But the answer is no. And a Lamborghini is $250,000. So I think it's for any brand that's thinking about franchising, like it's going to be just as hard work as your other business. And it's almost like starting up a second business. It's a whole nother business unit. And I think far too often it's like, you're overexcited to get this thing going. Like you're like, oh, I can scale through other people's money, and you jump in and you become a franchise, but you're not capitalized, which creates some of that threat. And so now you're sitting there at, say, a franchise expo, hoping that one person's going to come up and buy a franchise, and they're not there because they're not your customers. And so it's like I feel bad for the franchisors that just start out and don't have the right capital, because it's really, really tough to get going. This one's easy. Yes, Kai, ask all your questions here. We'll get them answered. Okay. We'll go Brent first on this one, then Charles. What is your perspective on franchise brands that award 10, 15 plus territories to single investor or partners, not private equity groups?
My opinion, great question, right? There's different levels to this. If you're a brand new franchise, or this is what I see sometimes where brands get into trouble. There'll be a brand new or relatively new franchisor. They'll have 2 to 3 corporate locations. Unfortunately, sometimes even 1 corporate location. Get out there, get some traction with the consultant networks or some organic traction, and award a 5 or a 10 pack. And not only is there's a lack of corporate or original scalability evidence, right, from corporate doing that 10 or 15 times, there's not a franchisee to do it. The point is, the best way I think to do it is to start to prove it out. Award a 3-pack. See if you can show some success there in a franchisee actually opening and operating 3. Then move to 5. Does that work? Most of all, as you're doing that, you're really trying to support those existing franchisees to help them go from 3 to 5 to 10 to 15, not just wait for the next one to come in who's willing to buy 10 and risk it there. Make sure that that support and that focus is on really developing those brands. Nick and Charles, we talk about it all the time. The most successful brands that we see, and we work with a couple of them, are those brands where they get to the point and they're working with an FSO, but by years 3, 4, or 5, they're doing 50 to 100 plus units a year. Most of those are just franchisees acquiring additional territory. That's the true definition of franchise success. It's not awarding 50 or 100 or 300 to new franchisees. It's franchisees that are reinvesting. And that's what you want to get to. You have to build and slowly build evidence of that. Doing 10 or 15 to a single investor when you're brand new is not great unless corporate's done it or you've got franchisees that have proven out 10 or 15 before, then go for it.
Charles?
I mean, it's right on point. If you're a new franchisor, I mean, here's the analysis, right? Brent's points about support are critical, right? Because, Nick, we discuss so often about the valuation of your franchise company. The highest valuation, highest multiples will relate to what is the cash flow from the royalties you're generating, right? And so you don't want sold but not open territories. You want producing territories. For emerging franchisors, new franchisors, selling to 10, 15 territories is a recipe for disaster, right? Because now you're taking a significant amount of capital from a new franchisee who now may have depleted capital that could otherwise have been reinvested in growing 1 or 2 territories, marketing 1 or 2 territories, adding the salesperson earlier to enhance sales and building that out. So there's value in selling multiple territories. For me, when I focus on the new and emerging brands, I would stay away from that. I would limit my sales. I would tell my franchisees, get up and running, be successful with these 2 or 3 territories, use that extra capital, and then let's decide if you're going to buy more. Now, but I do see the demand. Now, we have legacy brands that are dominating a category, and they're what old legacy businesses that are going to become extinct are now contacting our clients saying, we'd like to add your franchise in. And they want to buy hundreds of locations, right? And there at a franchisor level, the assessment is, am I going to onboard a publicly traded franchisor or investor group that doesn't know what to do with their capital? And this may be a great opportunity, but now I may be shifting economic power. So, I mean, I think a lot depends on, to Brent's point, who you are as a brand, what your support looks like, and your long-term goals.
All right, a few comments. One, be responsible about how you do deals. So in the broker world or the FSO world, there's a particular brand that I'm thinking of that did a 60-unit deal. The franchisee opened up one and closed that first location within the first year. Franchisee then paid an enormous fee that was split between FSO and the broker. So the broker FSO walked away with a lot of money. Franchisor had no money to support and guide that franchisee. Franchisee went out of business because it didn't produce that the way that they expected based on what they read in item 19. That story happens far too often. Now, 60 units is a big deal. If you go all the way down to the 3-unit deal, I like the 3-unit deal. I think that's fair. Sometimes I advise franchisors to qualify that someone can open up 3, but only award them 1. And then based on their growth, continue to give them more. Now, if I think back to the value of the area rep, which a lot of brands used to do this, early 2000s, you would basically have an area developer that would pay a larger fee to own the state. And they could then reap the benefit of those that buy in by in exchange, they would give them training and they would get percentage of the royalty and the fee. And I think about like Charles went and bought a lot of Bitcoin because Charles didn't want anybody else to come and buy more Bitcoin. And the reason he does that is supply and demand. He bought it up. And now if Charles would like to sell off some of that because Charles no longer needs that much Bitcoin, then he can sell it back. And that's like an example. Or baseball cards, like go buy 20 Jordan rookies. You buy it early on, Jordan becomes the GOAT, and you sell off 5 of them and you make the money. Unfortunately, that hasn't progressed into franchising, where a franchisee that is an early adapter and says, let me squat on this much property can actually now trade that as trade value. If that turned into a value, I think it'd be an interesting philosophy to let the franchisees say, like, I believe in this brand, I'm going to squat on it. I understand that I have to develop at a pace that is responsible. But when you squat on that much, it can hurt the business opportunity. Last thing I'll say is there was a guy that we worked with a long time ago, Nick Rizzi. He owned a business called Smart Tax. He went to H&R Block and said, I want to buy an H&R Block. He went through like their training and everything else that they do for franchise sales. Said, I want Brooklyn. They go, well, Brooklyn sold out. And he goes, yeah, but I can only see 3 of these things. And they're like, yeah, but they have the rights to 50. And so what that did is you had a squatter, a franchisee that was squatting on a territory and not releasing it. So that forced Nick to go and create Smart Tax. He created a competitor brand because he couldn't get into the brand that he wanted to get into. So you got to be careful, because if it hurts your supply and demand down the line, that could be a negative thing on what you're trying to accomplish as a franchise growth. And frankly, again, if you took every franchise or put them in a stadium and said, how many of you that sold a 10-unit agreement actually saw the 10 units get open, very few would actually raise their hands. So be careful on what you're doing there. Good friend Lisa. Lisa says, my question would be, what kind of conversations, education are happening between lead coming in to filling out the application? Charles, you want to go first?
I mean, my advice here is my conversations with Lisa, right? But when we're speaking with our clients, I don't know about the conversation itself. When we speak with clients, and I mean, when you have that first conversation, the candidate you're speaking with should know things about your brand and your team that you could not even imagine they would know, right? And so I think it all relates back to the depth of your website and what you're, how you're communicating your opportunity profile, and just communicating what your organization is. So I don't even know if there needs to be an active communication. They're going to be doing that research. On the active part, we recommend our clients, when they're scheduling and whatnot, they get automated, videos and other things. And it's just really focused on finding that good fit for the opportunity.
All right, I think Charles just gave my favorite answer. He goes, the answer to that is in my conversations with Lisa. So he's like, I'm
going to give Lisa credit too. I can't, otherwise I'll get yelled at by Lisa.
So I think there's a huge gap here in between the lead and the application. And the gap that ends up being built or exists is the lack of education of what franchising is. And so for very simple argument's sake, we've taken now 4 brands that we've gone back to their cold leads to try to re-energize those candidates. And we're starting with an education. Like, let's just tell you how franchising works. How much does it cost to get in? What are you going to find in the FDD? How much can I make? What are you going to find in the FDD? How does your due diligence work? We're not even in the sales process. And what's interesting, on all 4 of the brands that we've started working with, we're getting re-engaged conversations because the sales team goes immediately to how much money do you have? Where do you want to buy? And why do you want to buy? So I think it's a huge gap, which is where people like Lisa is solving that issue by saying, I'm going to use kid gloves with you because franchising is intimidating. Let me guide you along that path. Brent?
Yeah, I think that's great. And I think the only thing I'd add is whatever conversations or education are happening, have them fast. We measure this every year. And, if someone's out there and they click on a portal and they either get a brand or a franchise consultant, as we know, they're going to get bombarded. You're going to have different ways of different brands and different consultants getting access to that lead. And we do know that if you can be first, and usually it's within the first 5 minutes, put the offering out there, reach out, introduce yourself, establish the communication. It was about a 280% increase when you did that within the 5 to 30 minute range of that lead coming to application, as opposed to when we tested waiting 4 hours, 4 to 8 hours, that range there. So just getting in and having that conversation quickly is the first key. And I think you guys summed it up nicely on what you can talk about.
Okay. What's your take on building in-house sales team for a more niche franchise system versus working with brokers, franchise development organization? We are merging brand 40 units and thus far have grown organically without much development sales. I'll go first. Me, Brent, Charles. So that's awesome. Great to get to the 40 unit mark. In my opinion, that actually makes you more conditioned that if you want to turn on the accelerator, using an FSO or a broker network could be intriguing at this point, because it seems like at 40 units, obviously it depends on your gross sales and your net profitability, but it seems like you've built a foundation for the business, so you're not going to be reliant on a broker deal or an FSO to move forward. So now you're at an acceleration point that, in my opinion, if you're going to consider it, this is where you would really have that consideration. However, if you look back at what your sales projections are, and you know that you're utilizing that franchise fee in a productive way to go impact your franchisees' chances of success, then stay the course. Brent?
Yeah, I mean, I agree, Kai. That is awesome. To get to 40 units without really investing much, doing it organically is rare, and it means you've got such a strong business model. So congrats. This is coming from a guy that owns or owned a FSO. It depends how fast you want to grow, but without even knowing the answer to that, I would suggest you might not need it, because again, that's a rare accomplishment to get to 40 organically. Working with an FSO and the broker networks, the consultant networks, there's an inherent need for both of those to want to grow relatively quickly. So if you're only looking to do 5-10 units a year and thinking about, should I join a consultant network or an FSO, I think you'd say in-house is probably the way to go. It just depends how fast you want to grow.
Charles?
There's two issues here, right? No, the first one is working with brokers. I think it's great. I mean, this is a tremendous, just even as a fellow business owner, you're looking at someone building their business in-house team, and they've organically grown. The first thing I would say is absolutely get involved, depending on the industry you're in. But if you're in an industry where brokers are significant and play a dominant role, I would be playing on that field also. So I would join the right broker group and I'd start building up my broker game. But you could do that with your in-house team. So if I'm looking at here, we have our in-house team where we're developing our media, controlling our franchise sales processes, our CRM systems. I think this is a win, and I'd keep doing it all day. And I would just be branching out now too. So if you're not working with an FSO, I'd be looking at, well, how do they gain and what are they using to gain traction with broker organizations and broker groups? So I'd be building up that in-house relations with brokers. I think if you've sold 40 already, you know the way you need to be communicating and how to build that business. I think there's big opportunity there.
I'm going to just put up the second comment. Our concern is that our franchise is niche enough where it doesn't work well with the broker networks or outsourced sales. I will say, from my viewpoint, and obviously I don't know what your business is. That's exactly the benefit of a broker network, because they get someone that says, look, here's how much money I have. I don't know what I want to buy. Here's where I want to get to financially from a success standpoint. Align me to something that's in here. I'm not passionate about pool service or painting homes, but if that aligns to the financial outcome that the candidate's trying to get to, that might be actually an interesting lead in. But again, to get to 40, that means you're niche enough where the buzz is good enough. Brent or Charles, anything you want to add to that?
Yeah, niche works. Certainly, I agree. Certainly the networks. What you don't want is another burger concept. That's not going to do well in a consultant network. I think the fastest growing brand that we're involved with right now is a very niche ADU/tiny home franchise. Super niche, but the thing's growing like crazy. So, yeah.
All right, the next comment comes from a burger brand. So I'm just kidding.
I mean, look, there's certain categories that aren't as adaptable as broker networks. I don't know if it's because it's a niche business. It may have to do with initial franchise fees, initial investments, types of buyers. But I think that in-house team is amazing.
All right. Gene says, how can we explain to a candidate that is looking at a mature concept, competitors versus us, the new startup, why to choose us she means the beginning. There's the follow-up at the beginning. Brent, I think you're up first.
Yeah, so there's a lot, right? Like when you're a mature company, here's the headwinds you have. Territory availability usually isn't as strong. A-grade locations or territories are gone. So you have that up your sleeve. The best territories are still available to you. When I get involved in a franchise, like I just invested in a franchise too, a newer one that only had one franchisee, because I love the idea of being able to work alongside the founders and the franchise team and have real impact on how we grow the brand. So if I waited to be 100 franchisee number 100 or 200 at that point, you don't have that access, you don't have that insight, and frankly, it's just not as fun for me personally. Love being in the start and absolutely having been a voice in the narrative how that brand grows. There's quite a few long lists. I'll let Charles kind of dive in next, but they're my top two.
I mean, I'm biased toward emerging brands, but I think I look at it as guerrilla warfare. And so the emerging brands, I do. So if you're an emerging brand, I don't even know if I think you have an advantage over the mature brands. Now, in certain legacy industries where they're going to say all the, but you have all this media. Franchise buyers want to connect with founders and team and other humans. And I think if you focus on that human connection and you're genuine about the opportunity you offer and you pair up well on the apples to apples comparison, you could turn, so then what does a larger brand have against you? They're going to say, well, we're bigger and we have hundreds of franchisees. So you have to at least answer the question about performance and unit economics. But after you do that, use those personal connections and those opportunities as an advantage. And I'll also say too, I think mature brands are lazy. And when you go to their websites and you read their copy and you look, no, it's not a Fran fight, but you do. I mean, they just think it's good enough to say we're big. And so I would not, I just think there's an advantage there. And it's not from comparing yourself to that brand, but presenting yourself in a very different way with a very different conversation.
To all those established brands out there that are not going to work with Charles, feel free to call us. We're happy to work with you. Because I don't like those big gorillas.
No, it's not that. Even our large brands, they have personality.
And then he said it's not a Fran fight, but when your hands go like this, like that is the most dismissive action possible. All right, so here's my take. One is, it's not apples to apples. If you're an emerging brand versus a larger competitor, your offering has to be oranges to apples. McDonald's franchise fee is $45,000. For that $45,000, McDonald's is going to give you a shit ton of support. Like, there's no doubt in the world. And so when these franchise fees are getting out of control and you're not going to offset that, if you're using that for user acquisition to pay off the broker network, but you're not truly supporting the franchisee, shame on you. Like, that's not good. And so if you're looking at your apples to oranges, your franchise fee should be less than the big gorilla in the space, because you're not going to have the resources, the technology resources, the tech stack, everything else that goes into operating the business. The royalty should also not be as high if you want to make a different offering. And then you better be ready. I think the magic in Charles's answer is you want human connection. And so in a big brand, if you go buy a Papa John's today, you are lost in the shuffle. You are not going to get access to the CEO. And so you have to play that up, but you have to be authentic about it and say what that means. What are you going to do? Are you, as the CEO, going to get on a flight, fly out and be with them for their first 2 weeks? You're going to eat the expense of the hotel because you get it from the franchise fee. That's what it's designed to do, is to build the opportunity of success for that franchise owner. And you're going to say, I'm going to be with you for those first 2 weeks on the vehicle, showing you the way that I did things. And then when I leave, I'm then going to commit to coming and seeing you once a quarter as the CEO to help you stand out. Like, you have to make it oranges to apples if you want to win as emerging brand, or else the bigger brands, if the territory is available and the brand awareness is building and the ad fund is there, they will crush you because they're offering more resources. So you've got to find a way to give more resources. I'm just going down the comments. There's good advice. I like those. All right. Oh, Philip Schramm, longtime listener, first-time caller. Good to see that Phil's on here. Phil was a big listener during COVID. What are the franchising trends? Booming, stable, shrinking? Charles?
I don't know if I'm a good person to answer this. I don't even know if I know what's going on at France. No. I mean,
again, if you don't want to work with Charles, call me or Brent. We're happy to work with you. He's selling against himself.
I will say I am, at least in our little part of the world, I am not overwhelmed, but positively surprised by the strong momentum I keep seeing, we keep seeing. So we monitor internally. We have our FranIQ system. So now we have like real-time data and KPIs showing us FDDs going out, franchise agreements signed. From that perspective, I'm seeing a lot of strength in the franchise marketplace.
So
I think
it didn't answer the question. Go ahead, Brent.
I think like if we're talking franchise development trends, I think we're still very much in a growth phase, and certainly call it a bull market for franchising right now still.
Yeah.
What I would say is this. I think that it's really interesting that Kai asked that question before on am I too niche? What we've seen in franchising over the last, say, 10, 20 plus years are an original establishment and focus on what was after McDonald's in restaurant franchises and food franchises. And then in the last 10, even 5 years since COVID, there was already home services, but it really started to get concentrated and got a lot of investment and attention. And so a little bit of the focus and the selling and the growth went from restaurant and retail into home services. Right now, in this very environment, I would say that I'm starting to see that attention and investment go into niche concepts, away from both of those even slightly, away a little less into the painting, into some things that you might be surprised by. Again, our biggest, fastest growing brands right now are a tiny home franchise, a men's TRT or testosterone clinic franchise. We are bringing on a butcher franchise. I could give you a really long list of very new niche franchises. And so it's just that franchising model is really starting to expand out from where it has been concentrated previously in home services and in retail or food.
From the franchisor standpoint, booming is home service. The broker network has done a tremendous job of taking these folks that say, here's how much money I have, lower end, and say, what can I invest in? They show the inventory. They're exploding. And you can see that with the fast lanes of the world on the brands that are taking off. So that's booming for the franchisor. Now that doesn't mean booming for the franchisee, because there is a limited amount of profitability that comes from a home service franchise that you need to be very specific about the one that you're getting into. If you're looking to build wealth, then you need to talk to Brent about the small home building franchise. It's Anchor Tiny Homes. I can say it. Stable. I think education has stayed stable forever. I think pet services has stayed stable forever. Pet services on the larger investment side, I would call that booming for both the franchisee and the franchisor. Higher investment franchises are seeing a little bit more of a booming trend when it's non-food. Because the returns can be really, really, really nice. And I think people have built up wealth. You can see like kids no longer say they want to be a millionaire. They say they want to be a billionaire. So life has changed. What $1 million house was when we were growing up is much different today. And so those that have built up a little bit more wealth are looking at a little bit higher risk. The shrinking franchises, food is shrinking. And I'll tell you why. I think it's because the biggest competitor for franchise restaurants is DoorDash, Grubhub, because the end user can go on those and get access to every single food item that exists. So the biggest menu in the world, the biggest restaurant brand in the world is the one that doesn't even have to cook the food. And so that's changed the experience. However, for the brands that are in the restaurant space, this is your area of opportunity to do two things. One, perfect your packaging so the quality of that product comes to the house as fresh as it was when it got out of your kitchen, so that it doesn't deteriorate the further it gets away, because there's the fees. That's the second part. The fees are out of control right now, and you can look at the cost for a customer to get it delivered if the quality of the product is not as good as it was in the restaurant. And also, sidebar, restaurants are increasing their cost for third party above the cost of a restaurant. I think that's the biggest mistake in this whole thing. Like, make sure you're keeping the cost the same, so you're not ripping off the customer and passing that over to them. Take it out of your marketing budget if you need to, but you got to change the way you're looking at that. So I think the restaurant, the uniqueness in the restaurant category is shrinking, but the opportunity is actually climbing. All right, next one. Hey guys, we just finished all the docs with our franchise attorney and now are trying to figure out who to partner with to market and sell award territories to. I've tried a franchise convention and it was a mistake. By the way, the businesses Table or Tennis Inc. and Pickleball 2. We are a full tennis pickleball retailer. Charles, you want to go first on this one?
Sure. So retail business, so lease location, I'm assuming, in the $200,000 plus estimated initial investment. What becomes interesting is when you talk about, like, when I see franchise brands at shows, and they didn't gain any traction from an expo, I think it's really good to evaluate why you didn't gain traction. Okay. So number one, it could have to do with maybe shows aren't the right vehicle for retail business by like yours. But there's so many times I see franchisors at these shows and I don't know what their business is or what's unique about the business. There's one in particular I'm thinking of. They have a great mobile business in a great category, but you didn't understand that at the show. So my first advice would be, well, I'm sorry, guys, I even forgot the question, but
who should we partner with to market?
Okay, so here's what I would do. And this advice is advice I've taken myself. So number one, I would call up Nick or someone like Nick at an 1851 franchise. And here's what I would say. I'd say, Nick, first thing I want to do is assess. I want you to give us your assessment of our brand in terms of the transformation we're offering, our positioning as a retail brand. Are we telling a story with item 19 in terms of financial performance representations or not? But what are we, right? I don't want to just be a retailer. Is there a unique story here? Is there private label brand? Do we have do we have great blowout numbers? Nick, I want you to help us understand our brand positioning and then show, how can 1851 help me develop a story arc over the next 12 months so I could go into different marketing channels. That would be my advice.
Brent? You're muted.
Can I present the screen? Is there an option?
Yeah.
This is a PG. Do not show any pictures that we don't want anybody to see. This is a kid show.
Keep watching at your own risk then. Let me do that. Let's do a live review of Tennis Inc. because I think it's important. Let's see if I can make it happen.
Oh, this is good, Brent. Nick, I don't want to go before or after Brent. How can we work that if it's just three of us?
I'll fix it.
Hey, I've got two screens going. Go to, Nick, you can share your screen. Go to tennisinkshop.com. And I think while Nick's pulling that up, right? So this is coming from a place of love. I want new brands that are excited about franchising to do well and to not be disappointed with trade shows. So this is coming from a place of love. But I'm telling you, Tennis Inc., no matter where you advertise right now, you're unlikely to have any real traction. It's because if you get people interested in it, they're going to go to this website and they're going to click franchising. And if you heard Charles and Nick speak earlier, they were saying you have to get the foundational content right. This is not an example of a website that's going to be able to convert. By the way, love the concept, pickleball, tennis. When we talk about niche franchises right now that are ready to explode, congratulations, you're right there if you can get this right. But this misses on everything foundational that we know to be important or to correlate to actual franchise growth and traction. So you definitely need to work with a company like Nick, someone that can give you a professional website, a list of video content, presentations, brochures. It's all got to be out there. It's got to be highly visual. You're making an emotional connection. You're telling your story. It's right there in front of me. Can I envision myself owning this franchise? In this case, no, I can't because it's just a bunch of bullet points and I'm going to click on to the next one. So this is a great example of great concept, got to go do the foundation work.
Let me get back to the right screen. Yeah, I think that's really good feedback, Brent. And I'll say part of the magic with Brent is he evaluates brands for a living. And when he says no or pause on a brand, this is what you need to do. You really need to listen to it because Brent has that authority. I don't disagree with it. Invest in brand. It's not a call for us. Like you got to go invest in the brand side. Don't do any convention until you get that right because the journey of the buyer at 6.4 months. When you get to that site, they're not going to understand what you're selling. They're out. Even if they met you at a conference, they're no longer engaged. And I've used this line before. If we go to Tesla's website that's selling $100,000 investment, I guarantee you that $100,000 investment makes more people feel like $1 million than majority of franchise brands. And yet for franchise brands that are selling something over $100,000, invest in it, like make it count. It makes a huge difference. All right, we're going to go rapid fire here because we promise we're only keeping this an hour. So I'll throw these. I got the next two, one to Charles. Take this one. We had 2 early adapters join and leave within a year. How can you best overcome that since it's disclosed on an FDD?
That's for me.
Yeah, I'm giving that to you.
Yeah, I mean the answer there is you got work to do, right? We all do. So I'd be identifying why they left. I wouldn't be worried about the FDD. It's going to be in there. The bigger issue is was it on the qualification they weren't the right franchisee or they didn't have the right capitalization? If that's the case, then I change my process for franchise sales. If it's support or operations or financial performance, not only on the FDD, this may be impacting your item 19. So now's a good time, or now's a critical time, and there's an opportunity here. Go evaluate why it didn't work out. Is it a problem internally or is this franchise sales? Don't worry about the FDD. Let's fix this problem.
But my big idea on this one, I'm only going to provide a quick 2 cents on this. If it wasn't contentious, hire them back as consultants. You have great intel from the 2 of them that you can put in an advisory council for you, and turn them into validators to help you figure out what went wrong. Brent, I'm going to give this one to you because you'll give better recommendations. It says Nick's team has suggested HubSpot, but what CRM, what other recommendations should a brand look at?
Yeah, we use HubSpot one side of the business and Zoho the other side of the business. I'm more concentrated in Zoho. It's a vanilla CRM. You can make it do anything you want. There's a lot out there. I know Franchise Soft do a good job. FranConnect is popular. But it really depends what you're trying to do. At 80 units, I do think you need something pretty sophisticated. If you're willing to get in and tinker with it and make it do what you want to do, HubSpot and Zoho is great. If you're not and you don't really know what you're doing or what you're supposed to do with the CRM, a franchise-specific CRM is probably a better option for you.
Okay. Let's keep going rapid fire. We've been in the independent franchise space for 21 years in a home niche home services residential market. We've driven our lead flow from campaigns in Google, Craigslist, and a few other digital avenues. We are not seeing the same winnable opportunities like in the past. We were averaging 10 to 12 sales a year. Last 3 years, we were averaging 6 sales. Is this a trend that's happening in other industries? Brent, any comments on that?
So it's hard, right? Without knowing the business, this is all presumption. I don't think it's a trend necessarily. We'd need to really know what the home services brand is and a little more information, to be honest. That one's a hard one. Charles, do you have any ideas?
No, I mean, you know the best, but I if I had to guess, and again, it's speculating, is I would say it's become more competitive in the Google space and the paid, or I'll call it performance marketing. And so I'd be evaluating what my team is, what do our ads look like? What do our landing pages look like? I'd be playing around with A/B testing, and I would challenge maybe you need to start upgrading your processes from the past couple of years.
My few comments is this: don't get hung up on numbers, but also get hung up on numbers. So even if you're doing six just might be what your business is conditioned to do right now, and that's okay. Like that's still, you're adding a new franchisee every other month. I could give you 1,000 franchisors that would be totally jealous of that. So don't get hung up on what worked in the past and what didn't, but also swing over to what's your deal value. And if you know that a deal to you in cash is, just look at the cash, is worth $100,000, you might not be spending enough on lead acquisition to be competitive, and that means you're going to have to change your mindset and spend more. It does cost more to do franchising today. It used to be $8,000 to $12,000 per deal. Now it's $25,000, and to some broker communities, you're spending $50,000. So it's swung in a big way. You're going to have to make adjustments as we go. So we hit it. That's an hour. Great, lively audience. We are grateful to all of you for participating. We are going Ask Us Anything mixed with an exact topic. Next time will be exact topic 2 weeks from now. If you're on our emails, you're going to get our alert. You can sign up for our emails on the website, but we'll give you out the alert what the topic is. We're going to swing next one super heavy for franchise buyers. And we have a giant audience that we're going to invite in of potential franchise buyers. So for franchisors, you're going to want to see who's interacting because you can watch their names appear. Hint, hint. Go proactively do outreach. But watch for that in your inboxes. Great FranX. This was fun. I like these. It's fun when we have a very lively audience. We appreciate all of you. Happy franchising, everybody.